If you are looking to do some home improvements, perhaps you're looking to put an extension on, or a new kitchen, or a new bathroom, or something like that, but you don't have the money at the moment to be able to do it, then a home improvement loan is something you may be considering. But as I'm sure you know, home improvement is not cheap, and it might feel like you're constantly having to shell out cash. But the idea of today is we'll give you a geek's guide on home improvement loans and let you know exactly how they work and what to look out for. To let you know about me, my name is Greg Williams. I am a fully qualified mortgage advisor here in the UK, and I help people with unusual circumstances get the finance they need. And as part of that, we're just going to run through a really quick guide on exactly what you need to look out for when you're looking at home improvement loans. So, as part of that, we've just put together a very brief sort of thing of what we're going to cover today. So, what is a home improvement loan? I know that seems like a really obvious thing to go through, but so you understand exactly what we're going to be looking at. What's the advantages and disadvantages of home improvement loans? Is it right for you? These are not going to be right for everybody. How you negotiate with builders. I know this seems like a really obvious one, but having done this job for as long as I have now, we've seen this go wrong, and we can give you some tips of how to avoid it. Steps you need to take, how you need to put this together, how you budget for it, or how you budget in general. Nobody's ever taught that in the UK, and how to make the right decision for you. So hopefully this will take no longer than sort of 30 minutes to run through. And if you've got any questions, you can pop them in the comments below. Now, before we start, I should let you know that you should think carefully about securing other debts against your home. And obviously, if you do not make payments, your property could end up being repossessed. So, again, just be careful when you are taking out any sort of loan against your property. So, what is a home improvement loan? Quite simply, a home improvement loan is a type of loan that allows homeowners to borrow money to finance renovations, repairs, or additions to their property. And there's a couple of ways that you can do that. So let's start with the disadvantages. So, disadvantages of home improvement loans. If you're going to be taking out any other debt, any other loan, then obviously they're going to increase your overall payments. Now, this may seem like a very obvious thing to say, but it's something to consider because not everybody really thinks about it. If you're going to be taking out additional debt, then you're going to have to find the money to be able to service that on a monthly basis. Now, just again, if you do take out additional debt and you can't pay it, then your property may be repossessed, which is another obvious disadvantage of this. And obviously, it can be costly if you do not borrow enough money. So, for example, if you take out £20,000 and your new conservatory extension or kitchen actually comes to £25,000, if you're trying to get hold of that additional £5,000, then actually being able to do that, depending on the product that you use to get the money in the first place, can work out to be reasonably expensive. So try and make sure that you stay within budget. And the amount that you're looking to borrow is generally going to be linked to your income. So depending on what your income looks like, if you've got a reasonably good income, or it's going to be pretty much linked to what you can borrow on your mortgage. That said, every lender has a slightly different way of working out affordability. So even if your mortgage lender wasn't willing to lend you anymore, or you don't know if they were willing to lend you anymore, then it's still worth having a look around or speaking to a broker, because you might just find that there are other lenders out there that are more than willing to help. So the next one is the advantages of home improvement loans. So naturally, number one, they allow you to make the improvements that you need. So if you need that extra kitchen, that extra bathroom, or whatever it is, it allows you to do that. It obviously increases the value of your home. I say obviously, assuming that you do something that will increase it. So for example, if you just buy expensive wallpaper and put that everywhere, then you'll generally find that everybody will want to redecorate when they buy a house anyway. So it probably won't add value. Adding things like kitchens or bathrooms or extensions or conservatories, that type of stuff, that will generally add value to your home. So they can offer similar terms to your mortgage. And what I mean by that is you can generally take them out over a very similar term. So it depends on what you want to be paying back on a monthly basis. For example, if you want to get the lowest payment that you possibly can do, you'll want to take it out over the longest possible term. Obviously, doing that means you pay more interest. It gets you what you need. It gets you the new kitchen or the new bathroom. It's different to if you did this using an unsecured loan, and I'll come on to that later on. And the important thing to remember is you can do this without having to wait until your existing loan comes to an end. So if you've currently got a mortgage on the property and you've got a couple of years left to run on with the early repayment charges, etc., then you can actually look to raise money now, either through a further advance, and you can get that from your existing lender or from your mortgage broker, or you can look at something called a secured loan or a second mortgage. And again, they are available through your mortgage broker. Have a chat with them and they can let you know exactly how that works. Okay. Is it right for you? The most important thing here is consider what it is that you're looking to achieve. All right. So, do you really need it? Do you really need the additional bedroom? Do you really need the extension? Why are you getting it? Yeah, are there any other options? Could you do the work slower, for example, and pay for it as you go rather than raising money? If you're only looking to redecorate, maybe you can do one room at a time and do that from your wages. That'll save you the interest and the fees and everything else that go along with home improvement loans. So have a real think about how else you could do it rather than borrowing money, and compare different home improvement options. So there may be, if you're looking at kitchens, for example, there may be it's one that's offering a 0% credit, or they could be offering other finance terms that are better than just borrowing money against your property. And at that point, it will also be unsecured. And if you can do this unsecured, it's affordable and it doesn't cost a fortune in interest. It's something you should definitely consider, because unsecured loans, unlike secured loans, they don't affect or shouldn't affect your property. So if you can't pay them, there's less likely, although not impossible, but it's less likely that you're going to get repossessed. If you cannot pay anything that's secured against your property, then it's far more likely that will go down the road of repossession. So again, make sure you consider all the different options. And if you're looking at secured finance or mortgages or secured loans or whatever, then have a chat with a broker and they can obviously let you know exactly what is available there. But most brokers won't be able to help you with unsecured loans. You will need to do that either directly with the home improvement company or with a bank or building society directly. How to choose the best home improvement loan option. Like most loans, you consider the fees, the interest rate, and the repayment terms. Are the fees reasonable? Is it a reasonable interest rate? Can you afford it? I think go back to what we said at the beginning. Do you really want it? Is it worth what you're actually paying for it? Okay. And think about your long term financial goals here. If you're going to be taking out a home improvement loan, but in 5 years' time you're considering retiring, it's probably not the best idea to do it now, unless, of course, you've got a lump sum from a pension or something that's going to come out later down the road to pay it off. And consider the impact on your credit score. If you are considering this and you do too many credit searches or quotations or whatever, it will start affecting your credit score. And if it does affect your credit score, if you do eventually make a decision to make an application, you might find that it has affected your credit score too much at that point you end up getting declined. So think about your credit score. Don't do too many searches, but definitely have a little look around to see what people can offer you. Negotiating with builders. So we've been in this industry 15, 16 years now, and over that time, we've done lots of different projects and work with builders and developers and property investors and everything. So we've seen this go very right and we've seen this go very wrong. And the best thing I can say is use your gut instinct. If you don't think something's right or you think something's too cheap, then go with your gut is probably what I'm going to say. But we've also seen far too many people get ripped off by builders over the years as well. So by protecting yourself, doing some very simple things, it can help you make sure that does not happen to you, because there are more reputable, decent builders out there than not. And it's just about making sure that you are choosing to use one of those. So first one, and the very obvious one, is always get multiple quotes. Okay. So make sure that you get almost like a schedule of works. So you know exactly what it is you want. Whether that's a new kitchen, new bathroom, and try and be more specific. So if it's a new kitchen, do you want new tiles? What color tiles do you want? Try and be as specific as you can when you're asking for things, because that way you can give that to your builders and you can say, right, give me a quote based on that, because you kind of have to compare apples with apples. If you're not comparing a quote which is like for like, then it's going to be very difficult to work out who's got the better price. So we'd always say get a minimum of 3 quotes from 3 different builders and compare them and see what they've got to say. Okay. Understand your budget before you even start. So it's always worth, if you're going to be raising money, especially using a home improvement loan, it's always worth getting advice from a broker or whatever you're going to get the loan from to make sure you understand what it is you can afford. There is no point in approaching a builder and asking them for, I don't know, double extension when actually you can only afford a small kitchen refurbishment. You need to understand what you can borrow first of all, because it does cost builders time and money to put these quotes together. It is quite time consuming. So if you go to them and say, right, can I have a double extension, please? And you only end up going with a sort of small kitchen, sometimes that can annoy them a little bit. So probably best to understand what your budget is before you start to negotiate with them. And don't be afraid to walk away. Some builders, obviously they want the work and they're going to be very keen to start working with you, but always make sure you're in a position where you are completely in control. So have all the quotes in and make that decision of who you're going to proceed with without any of the builders around. Don't give it to them when they're standing in front of you. And make sure you let the builders know that's not something you're looking to do yet. You're not looking to make a decision whilst you're still talking to somebody. You want to have time to go away and compare the quotes before you can actually instruct a builder. And most reputable builders will completely understand that and will be completely supportive of that. And always ask for references. And I realize this seems like a very strange thing to say, but make sure that you ask for references from others and other work that they've done. So if you are going to be spending 20, 30, 40,000 pounds with somebody, you want to make sure that the previous work is decent. So make sure you check on Google, make sure you check on review sites, put their name into Google to see if anything negative comes up. If they are using a limited company, then pop that limited company name into the company's house search. You can do this free, it's online. Just pop into Google company's house in the UK and you can search that company name. Make sure it's active, make sure its accounts are up to date, make sure that it isn't owing anything, because the more you understand about the company that you're going to work with, the better position that you're going to be in. And above all and above anything else is do not rush. There is no reason to rush whatsoever. Take your time. Make sure you pick the right lender. Make sure you pick the right builder. Make sure you're having the work done that you really need. And then you can make a decision to move forward. Again, I need to remind you at this point that you should always think carefully about securing other debts against your home, and you may get repossessed if you do not make the payments. Again, this makes our compliance team slightly happier than they would be otherwise. Really quickly then, how to budget. So we've covered this in other videos, but I think this is really good to include here as well, because generally in the UK, no one is taught how to do this, which is really annoying. So how to budget, there's various different ways of doing it, but we tend to look at a rule called the 50-30-20 rule. So this is 50% of your income. So this is 50% of the money you receive on a monthly basis. 50% or half should be to cover your main bills. So the cost that you need in order to live. So this will be your rent, this will be your mortgage, this will be your weekly shop, your gas, your electricity, the stuff you need to survive on a monthly basis. This isn't things like Netflix, for example. So make sure that all of those costs fit within that 50%. The next bit, which is the 30%, these are the things that you would like to have. So things like Netflix or Amazon Prime or things like that. That 30% is also really where your debt payment should be. So if you're looking at a home improvement loan, that 30% is where that payment should come from. And this is something that lenders use when looking at affordability. They will look at something called a debt to income ratio, which is essentially this. So the lower your monthly payments versus what you're getting in every month, the better your chances of being accepted, especially at a decent rate. So make sure that all of your debts and all of the things that you like to have, like gym memberships or anything like that, fit within that 30%. And the 20% then is for savings. And I say this to people and they think, oh, well, I can't afford to save. Well, I'm not saying that you should save up to pay your mortgage off here. I'm saying that you should save up enough that if something happens in the house, you've got enough money to fall back on. So, for example, if you need a new washing machine, new tumble dryer, anything like that, anything, a new boiler, anything that happens where you think, well, hang on a minute, I need to get something new and I need to get it now. We can't live without like a fridge freezer, for example. So the saving there is saving that 20% of your income to make sure that you can hit ideally 3 months worth of your salary payments. So you've got that to one side just in case you need it. And that's a really quick tip of how to budget. And if you can do that, and especially if you can stay within that 30% rule for your debts, you are far more likely to be accepted than not. How to make the right decision. Naturally, being a broker, we're always going to suggest that you seek professional advice, whether that's from us or somebody else, but always get advice from somebody that knows what they're doing. So getting advice from the neighbor who's done this before, or a mate in the pub or whatever, yeah, that's great, but probably not the best place to be getting advice from. We see this type of stuff every day. We can tell you whether something's right or wrong. The idea of a mortgage broker is we do not say yes to everybody, because sometimes things are just not the right option. Make sure you consider all the options. So although as a mortgage broker, we can only look at secured lending, so whether that's mortgages, secured loans or whatever, there will be others. So for example, there's going to be unsecured loans, like from your bank or whatever. There'll be deals that could be available from home improvement companies. So make sure you have a look at everything before you make a decision. And check out your existing debt and your budget, like I said. So if you've currently got lots of debt, which is adding up, then maybe it might be worth looking at. If you really need to do the home improvements, you may want to consolidate the debt and do the home improvements. And that's something that you can look at. And again, like I said at the beginning, do not rush this. Take your time and make a decision that's right for you. If you are looking for professional advice, as I said at the beginning, we are a professional advice firm. We are the Money Geeks. We're an award-winning team. We've won 2 awards now in 2 years running. We've got expert knowledge across the market. We will always be able to save you time and money because we do all of the legwork for you. You deal with us and we deal with all the lenders. It's always a personalized service. There is no such thing as a one-size-fits-all approach. We understand what it is you're looking to achieve, what your monthly budget is, and then we can make a decision or a recommendation from there. And we've got a wide range of options available as well, not just your standard sort of remortgages and secured loans, but there's other options we can consider if they are right for you. And then right at the end, we do offer a free consultation. So if you did want to work with us and just see what it is that we can offer, then we can do that. There will be a link either in the description or a button around this video somewhere that you'll be able to click on there, and you can make an appointment to have a little chat with either myself or one of my colleagues, and we can run through everything with you, understand what it is that you're trying to do, what your circumstances are, and then make a recommendation from there. There is no cost for that initial meeting. If you want us to do that, just like I said, click on the link that's either in the description or the button around the video, and then we can go from there. If you've got any questions, feel free to get in touch or pop your question in the comments below, and I will speak to you very soon.